Good evening, everyone. Thanks for joining me once again on this episode of Crypto Watch. Yep, thanks everyone. So if you are watching this video, right, don't forget to give this video a like, right, so that I know that you are watching this video, right? So today, right, we are actually going to talk about 7 steps to weather through the current market volatility. So these 7 steps is something that I've created myself. Yep, basically in view of the current market volatility, right? So I realized that some people might actually be making losses during this current market volatility, right? So if you have been one of them, right, this video might be a good reference for you. And some of you who thankfully have not, right, you are concerned, right, that you don't know whether you might be able to survive through this volatility period, right? So this session here, right, is also going to help you to basically show you how you can pull through, right, with minimal damage. Yep. So without further ado, let me proceed. Right. So if you have seen me before, yep, I'm the trade engineer. But for those of you who are watching this video for the first time, let me give you a brief introduction of myself. Right. So I am the trade engineer, right, or TTE for short. Right. So I have about 6 to 7 years of trading experience. Right. I've traded numerous instruments, including stocks, futures, forex, and cryptocurrency. Right. So I've also helped numerous aspiring traders unlock their best trade and unleash the trading potential within them. And all this can be done right using just some simple to use yet effective techniques. So that's me in a nutshell. Right. So before I proceed further, right, as always, I would like to give some disclaimers over here. Right. So while accuracy of information is ensured as far as possible, right, there will be no responsibility taken for any loss of inconvenience created by any omission or error. Right. The ideas, suggestions, examples, and information presented here, right, are just for reference and educational purposes only. Thirdly, the presentation contents here are not intended in any way to give trading advice or recommendations to buy or sell any trading instrument. And me, the trade engineer, shall not have any liability for any loss or expense whatsoever relating to the trading decisions undertaken by the audience. Last but not least, all copyrights reserved. So with that out of the way, right? Let's dive deep into the market volatility, right? Especially in the recent times, right? So this over here, right, I have a trend of the VIX future, right, S&P VIX. So VIX is actually a volatility index, right, for the S&P. Yep. So I've included this chart over here, right, just to show you, right, that in recent times, right, it has been increasing, right. So if the VIX futures is increasing, that implies that the volatility, right, the sign that there is a sign, right, that the volatility is also increasing, right. So it is it's not as high as the previous time, right. Yeah, but there are signs that it is increasing, right. So you don't know how it might pan out in future. It might make a steep jump depending on what pans out in the near future. Right. So in the related terms, right, let's look at some of the major stock indices in the US, right. So one of them is the Dow Jones, right, the Dow Jones Industrial Average. I can see that it has been climbing, for quite a period of time, right, until recently, right, where it actually started to drop. And this is something that is also seen, right, in the S&P 500, right, another index, tracking the 500 companies, the top 500 companies, right, in the technology sector for the US, right. So in the recent times as well, right, it has been dropping as well, right. So if we look at some of the recent news, right, for this, right. So for S&P, right, this is taken from Reuters.com, right. So in recent times, right, there is that these news, some of these news that S&P 500 has has reached a correction zones, right, as the the whole US stock, actually stumble on war fears, right? This was just a pretty recent article in February. And even in March, right, another article, right, is from npr.org, right? It actually says, from the title itself, you can tell, that there is, it's reaching a correction zone, right, for the Dow Jones as well. Yeah, I mean, if we look at the details, right, of the article, right, so actually, the Dow Jones also joined the S&P 500, in the correction territory, right? So it actually dropped more than 10%, right, from recent highs, right? So even the Nasdaq itself, right, another index, right, also fell, right? So all these major indexes, have been, or indices, right, have been actually falling. Yep. So all these represents increased market volatility in at least for the stocks in US. And there's another article in recent times as well in March, right, taken from Market Watch, right? So this is more on a technical term, right, a death cross, right? So it actually implies that it seems like there is going to be this long-term bear market coming for the S&P 500, right? And it offers some reason for why this is so, right? There are fears of inflation, right? And as we all know, right, by now, there's a Russia and Ukraine war, right, that is actually rattling the stock market and causing some fear in the market. So some people are selling off the stocks and causing this increased volatility, at least in the stock market. But that's not, that's the volatility doesn't just end in the stock market, right? In terms of commodities, in this particular case is for nickel, right? So nickel, right? If you're reading the news, right, in a few days ago, right, there was this nickel short squeeze, right, where the price of nickel actually spiked very ridiculously, right, causing the unprecedented halt, right, for the trading of nickel. And in fact, right, this actually resulted in one of the Chinese tycoon, right, facing billions of losses. And this is because he shorted the market, he shorted the nickel futures, right? And with the short squeeze and the sudden spike in nickel prices, right, he suddenly found himself in a huge loss position, right? So this also, represents, a volatility, right? Increased volatility, not just in the stock market, but also in commodities such as nickel, right? And so this is the stock, the price, right, for nickel, right? And you can see that, in just the recent time, right, just one day, right, it actually spiked to more than $80,000, right, dollars per metric ton, right? And in this article, it actually said the WTF moment, right? So it's like it's never seen before. You can see the past 10 years, we've never seen this spike in price for nickel, at least. And suddenly, all of a sudden, you just see this huge, spike on a single day, right? So this is actually, something that we have to be cautious about, right? Because if it can happen in nickel, right, it can happen in other instruments as well. Yep. So not just nickel, right? If you've been following gold, right? Gold as a safe haven, right? It has also been, experiencing increased volatility, right? So this article, right, taken from Reuters.com, right? So it actually makes a comment here that gold makes run for record high, right? So it's it's reaching new highs, right? With the concerns of the Ukraine-Russia war, as well as inflationary pressures. Yep, another article from Bloomberg, right? So if you've been tracking the price of gold, right, it has actually risen to above $2,000, right? Especially in this kind of wartime, right? People would flock to safe haven, right? So one of the safe haven instruments will be gold, right? So the price of gold has also been seeing some increased volatility. And if you see the price, right, this is the gold price in recent times, right? You can see that actually it's been high for quite some time already, and it just reached newer highs, right, in this latest period, right? So it actually reached a lot higher than 2000. In fact, it reached, I think, almost touched 2070, right, thereabout. So actually, it is we are seeing a lot of increased volatility, right? This is another commodity, right, that is also experiencing this high volatility, right? So you can see that it actually has a huge green bar up, right, to above 2070, right? And next day, right, just fell back down, right? So it's one day up, one day down. That is something that it is good if you are on the right, you are on the right position, right? But it will be bad, right? It'll be a nightmare for you if it's going the opposite direction of your trade, right? So we have to be very careful. We have to be very mindful that this this can happen, right? Right. So yeah, you saw that steep increase, right, in recent times. The gradient is so steep. Yeah. And not just the gold and nickel for commodity, right? We have other commodities, right, that are also seeing a huge spike, a huge gain, right? In fact, I think this graph encapsulates the situation for commodities very very clearly, right? So this is taken from Market Watch as well, right? So it actually tracks other commodities like wheat, like crude oil. So wheat is in this green line over here, right? And the crude oil is this purple line, right? And it also tracks this S&P GSCI index, right? So it's actually a commodity index, right? So it actually keep track of the major commodities, right, as an index. So you can see, right, that all three lines are actually increasing very steeply, in recent times, right? So this is something that we have to take note, right? So it's this volatility affecting commodities as a whole, right? Not just one or two, but the whole commodity market. And of course, if you have watched my previous videos, right, you also have seen that Bitcoin itself, right, has also experienced increased volatility, right? So these are some articles that I shared previously, right? So Bitcoin actually jumped 10%, right, on this very day, 28th of February, right, after the US Treasury imposed new sanctions, right, against the Russia Central Bank. And as the Russia and Ukraine war continue to persist, right, Bitcoin volume actually spike up further as well, right? So I also mentioned previously in my previous video, what are some of the reasons why this is so. But all this just gives the cryptocurrency market more volatility as well. Right. So this particular day, right, was the day where we saw that 10% increase, as what the article said, on 28th of February, right? Yep, that 10% increase, right, in Bitcoin. So if you are also trading Bitcoin or trading any of the cryptocurrency coins, you also have to be very mindful that the period now and in the future, right, can potentially be very volatile, right? So we can see this kind of huge price increase or decrease, right? It can go either way. Price can see very big fluctuations, so we do have to be very careful. Right. So there are other articles, right, that try to explain why there is volatility in the market, right? So as you all know, right, it's a huge factor to play is basically this Russia-Ukraine war, right? In fact, what they're saying is this Russia-Ukraine war might be a preamble to a second Cold War, right? Leading to more increased volatility and even more supply shocks. Right? This is taken from Market Watch. And for this article from IPE.com, right? It's also talking about the increased volatility seen nowadays with inflation, right, being another concern, right? So this inflation could also be caused by this war, right? With crude oil prices spiking up as a result of less supply from Russia, right? So this also exacerbates or worsens the inflationary pressures, right? And this article from Real Money, right? TheStreet.com, right? It actually also states this high volatility, right? In fact, it's saying that high volatility might be seen only in bear market. So are we in a bear market? I'm not sure about that. We did see some correction in the global stock market. Yeah, but it remains to be seen, like whether this would persist. And in this article, right, it actually talks about a lot of things, right? It talks about the S&P 500, right? As we saw, it had huge price fluctuations. right? And all this is also driven, what's the reason behind this is also because of oil, right? Crude oil prices, so commodities, right? Which also has seen quite a bit of fluctuation. Right, and this article also continues to talk about what's the reason for the volatility, right? So there's this CPI report, right? At that time, right? And they also saw that gasoline, commodities, food, basically inflation, right, is increasing, and it is not expected to go away anytime soon, right? So this volatility in the whole market, right, might continue, right? Might continue to persist. So all this is very real, right? And all this could lead to a concern, right, among you and I, right? Traders or investors, yeah, in whatever instruments we trade in or invest in, that this might be a time where we might actually lose a lot of money. Yep. So how do we actually safeguard our profits? That is something that is very critical and very important for all of us here. Right. So how do we take steps, right, to manage this increased market volatility, right? So if I go into the details, right, if you are finding value in this video, right, so far, yeah, please give this video a like or a love, right, so that I know that you are finding this video beneficial. So yeah, let me go into the topic proper, right? So these are my 7 steps on how to weather through the market volatility, right? Yep. So first of all, right, step number 1, right? We should always keep calm and don't panic, right? Many a times, right, we are always panic and start to do things that are illogical, that do not make sense, right? And that is usually the cause of the failure or further losses, right? So first of all, we have to be very mindful of this, and we don't always remind ourselves not to freak out, right? Sometimes you can unintentionally freak yourself out because it's not part of the mind, right? Because it's a subconscious thing. And you see the price goes against you, very rapidly, especially during times of volatility. You might start to freak out and panic, right? And you start to do things that you might regret later on, right? So you must always remember, right, to keep a rational mind while trading or investing, and don't trade on impulse, right? In fact, right, if you actually keep calm, right, you might think through things more clearly, right, and you might actually see opportunities, right, and make money from this time of volatility instead. So yeah, I'd like to share this famous quote from Warren Buffett, that actually helps to basically showcase, right, this point quite clearly, right? So basically, right, what he says is that we simply attempt to be fearful when others are greedy, and to be greedy, right, only when others are fearful, right? So in times of fear, right, that is usually when we are seeing market volatility. It might be an opportunity, right, to actually be greedy, right, to catch things on a low, right, and it might actually pay you dividends, sometime down the road, right? Right, and what is the next step, right? Step number 2. So step number 2, right? My step number 2 is basically to keep the emotions out of trading, right? Many a times, right, we let our emotions control us, right? We become very emotional, and this is natural, right, for every one of us since we are human, right? We all have emotions, but if basically if you let emotions control you, especially if it controls your trading, right, then there is no different from trading and gambling, right? So because you might start to trade without reason, right? You might trade without logic, and you might just trade on impulse, right? So more often than not, you will end up losing, a lot of money, right? As they all say, right, in Chinese for gambling, right, 十赌九输, which literally translate to, basically when you gamble 10 times, you'll lose 9 times, right? So if you let emotions control you, it's akin to gambling, and you might just lose more than you win, right? So you don't want your losses to spiral out of control, and you also don't want to feel disheartened and demoralized, which will actually lead, to a vicious cycle, right? That cause you to be more emotional and make more mistakes, right? So you don't want that to happen. So always keep a clear mind, right? Always stick to your own fundamental trading principles and methods, right? And try to keep these emotions out of trading. Right, so here, let me share basically a quote, right, that encapsulates this point very clearly, right? So this is from Mark Douglas, right? And he mentions that if you can learn to create a state of mind that is not affected by the market's behavior, the struggle will cease to exist, right? So, if you are able to take yourself out from how the market is behaving, right? You don't ignore what the market price fluctuation is doing, right? And you will maintain a neutral mind, right? Then you won't have this struggle, right? A consistent struggle within you that will lead you to make emotional mistakes, right? This is something that I hope everyone would bear in mind, right? Especially during these volatile times. And yes, now we go to step 3, right? So what is the step number 3? So for me, right, I identified the step number 3, right, to be removing the noise, right? In fact, there's something called noise trading, right? Where you yourself are influenced by all the different noises out there, right? So this noise can come in many different forms, right? It can come from news articles, right? Various news articles, sometimes they may not be even factual, right? It might just be a rumor, article on rumors, right? Or read analyst reports, right? So analysts do have this buy and sell calls, right? But it is their own perspective, right? And sometimes it might be too late, right? So so you only should take that with a pinch of salt, right? And not take things wholesale. And the noise can also come in other forms, right? Like hearsay rumors from friends, right? Or even random price fluctuation in the market, right? So it might be influenced by the price noises, right? So I think very importantly here, right, is we should not let all this noise influence you, right? They are after all just noise, right? Don't let this cloud your judgment and create confusion, right? Because you want to have a clear mind when trading or investing, right? Don't let that adversely affect your trading. In fact, you should always stick to the fundamental principles, the basic principles, right, of trading, right, and stick to the strategies that work for you. Right, so this code here again, right, is something that encapsulates this point, this step number 3, very well, right? So what he says here, right, from Richard is listen to what the market is saying about others and not what others are saying about the market, right? So this is a very good reminder to all of us, right, that we should not listen to other people who might not know who might be equally clueless, right? But you should watch out for the market for signs, right, of what is going to happen. And right, what is step number 4? Right now we are reaching step number 4, and step number 4 is none other than reviewing and refining your trading strategies, right? So this is very important, right? Because in times of market volatility, right, some strategies might not work as well, right? You might actually incur more cut losses and become more unprofitable. So you need to constantly review it, review your trading strategies, make some tweaks make some amendments, right, as necessary, right, so that it is less influenced by these huge price fluctuations, right, or news or unexpected news in the market, right. So do bear in mind, right, there are many different trading strategies out there, right. There is no best strategy, right, only the best for your trading style, right. And I think at this point here, right, I'd like to remind all of you, right, that in times of volatility, we have to be flexible, we have to be nimble, right, especially when it comes to your trading strategies, right. You don't want to be stop out prematurely, or you don't want to be losing more than you win, right. So constantly, keep a diary, keep a journal, right, a trading journal, so you can constantly review your historical trades, right. And from there you can adapt and make the tweaks as necessary, right. Don't be afraid, right. Some people are adverse to change, but don't be afraid to embrace change, right, especially in times of market volatility, right. We do have to readjust at times, and a period of market volatility might just be the time where you actually have to readjust some of your strategies. So here, right, we have this quote from Charles Darwin, right, that actually also helps to basically summarize this point very clearly, right? So what he says, it is not the strongest or the most intelligent who will survive, but those who can best manage change, right? So you have to be not change averse. You have to be someone to be able to embrace change, to be able to survive in the increased volatility period. Right. So at this point, right, let me take a pause, right? We still have the 3 remaining steps, right? And I'm sure you are all curious to know what are the 3 remaining steps, right? But before I do so, right, if you're finding value in this video so far, right, please, once again, give this video a like or a love, so that I know that you are finding value so far, and I will continue giving such content in future. All right. So what is step number 5? So step number 5, right, is none other than abiding to your trading plan once the trade is executed, right? So let me give you, basically something. Let me ask you a question, right? Right. So I'm sure this might have happened to all of you, right? So I'd like to ask whether this has happened to all of you, right? So you enter a trade, right? And you set a trading plan, right? You set your take profit price, you set your cut loss price, and you enter this trade. But right, when things go out of favor, right, you start to readjust, right? It's the trade that goes against you, you start to readjust maybe your cut loss price, right? It start to go down. You start to adjust your cut loss price down, and then the price goes down even further, and you adjust it even further down, right? And eventually, right, you cannot take it anymore, and then you just end up cutting at that low point, right? So you actually cut loss at a point that you didn't want to cut loss previously when you first entered, but eventually that's what happened, right? As the trade went against you, right? So if you had if this happened to you before, right, leave it down in the comments below, let me know. Yep. Because personally it has happened to me before as well, and that's why I like to share with you, right, that it's very important to actually abide by your trading plan, right, at all times, right? So don't be afraid to take losses, right? It happens to everyone. We are all not 100% correct, right? But what you want to do, right, is you always want to ride the winners and cut the losses short, right? You don't want to cut a big loss and ride a short winner, right? Then you won't be profitable, right? You won't be consistently profitable in trading, right? So you should always, remember this and stick to the plan, right? Don't change the plan along the way, right? Because changing a plan, sometimes it might work, but more often than not, it might actually go against you, especially in times of market volatility, right? You want to protect your profits and not give it all back to the market. And you know, I'm sure all of you have heard this quote before, right? It's a very famous quote, right? So what it says here is plan your trade and trade your plan, right? You should always have a trading plan, right? You set your cut loss, take profit price, right? And you know, always abide by it, right? Don't make any changes to it, right? So that you can, you know, like the winners in the end, right? And emerge consistently profitable. All right, and now we are reaching to step 6. All right, so step 6. What is step 6? So step 6 here, right, is do not overtrade. Right, this is very important. I cannot stress enough on this. Right, this is something that happens to a lot of people, like me included. Right, so you know, sometimes you get greedy, right? You start to trade more than usual, right? Or you might actually have taken a recent loss, right? And you are anxious to get it back. You are anxious to recover your loss, right? So that so you tend to, you know, trade you tend to overtrade, right? Or trade when there is not a good opportunity, right? So you always have to remember, like, to strike a balance, right? You know, trading opportunities do not exist all the time, right? Only enter when there is a good golden opportunity, right? It can be very enticing, right? You can have that fat finger syndrome, right? Where you actually press a trade only to regret it immediately after that, right? So I know, you know, a lot of people will have that mistake, right? We have made that mistake before, right? Because all of us like to make money, right? And we are all sometimes a bit anxious to make as much money as we can, right? But we do have to remember that good opportunities do not exist all the time, right? Don't forget the underlying risk, especially in times of market volatility, right? Always work out the risk to benefit ratio, right? And make sure that it is a potentially good trade, right, before you even think of entering, right? So you do have to watch out, especially in terms of market volatility, right? Because the price fluctuation could be very large. So do remember as well, right, that it is not about the number of trades, right? But it is the consistency, right, and the quality of the trades that matter. So that with this quote here, right, from the legendary Jesse Livermore, right, in which he says that there is a time to go long, right? There is a time to go short, and there is also a time to go fishing, right? So what this means, right, is there's a time to buy an instrument, right? Time to, you know, short sell an instrument, right? And there could be also times, right, where you shouldn't do anything, right? You should just take a break and maybe go fishing, right? So here's a reminder that, you know, if there's no opportunity, just don't trade. Right, and we are reaching the very last step, right, of my 7 steps, right? So the last step, right, that I have for all of you here is do not rush to enter or exit a trade, right? Do not rush, right? That is very important, right? Because, you know, in times of market volatility, right, there could be all these knee-jerk reactions, right? Huge price fluctuation, right? All due to sudden news. So we do have to be very mindful. We do have to watch out, and we should always think twice before clicking that buy or sell button, right? But, you know, to prepare yourself, right, for all these unexpected fluctuations or reactions, right, in the market, right, we should always keep ourselves abreast, right, of the current macroeconomic outlook, right? Like what's happening in the market now? What's, you know, there's this Russia-Ukraine war, there's these inflationary pressures, there are commodity price spikes, right? All these, we do have to keep ourselves aware, right? And keep ourselves informed of all these news in the market, because all these can affect the individual instruments. And, you know, we also, like, have to also keep track of any news related to the particular instrument, right? Like whether there's going to be a particular, you know, earning that's going to be released for a particular stock, right? Or is there going to be some NFP news, right, for Forex, right? So typically, as a rule of thumb, right, you don't want to trade when there is an impending news for a particular instrument, right? Because you never know how this news can affect this instrument, right? It can go up, it can go down, right? And it can go up and down very very big, right? The change might be very big, right? So you don't want to get a rude shock, right? If you are caught on the other side of the trade. So here, right, we have this quote from John Borch, right? Time is your friend and impulse is your enemy, right? So I think this encapsulates this point very clearly, right? On the point of do not rush, right? Should always take your time, right? Of course, don't take too much time, but do take some consideration, right, before you enter or exit, right? Because it might actually save you from some potential losses, right? The worst thing that happen is when you trade on impulse, right? That's when you might actually regret instantly thereafter when the trade goes against you. Right, so this concludes, right, my 7 steps, right, that I have on how to handle the current or future market volatility, right? So if you are finding value, right, in this video so far, right, as always, don't forget to give this video a like or a love, right, so that I know that you are finding value in this video. And as we reach the last part of my presentation, right, as always, I will give my weekly review of Bitcoin, right? So let's recap once again on Bitcoin. And if you haven't already done so, right, do check out my previous analysis, right, in my previous video, right? So I've been doing this for past few weeks already. Yep, so you can always check them out. Right, so let's do a quick recap, right? This is last week recap, right? Where I actually identified 5 things, right, to look out for. Right, so first of all is this downtrend line, right? This downtrend line, right? I asked the question here whether the price can actually break beyond this line or will it actually be resisted by it, right? At that time, it was trading below this downtrend line, right? So it's still, in a way being resisted, right? It still hasn't crossed this downtrend line. And second of all, right, was the uptrend line, right? This uptrend line that I drew, right? I asked then whether price will remain supported by this uptrend line or will it actually break below this uptrend line. And we did have this upper resistance line, right? That was tested, numerous times in the past. Yeah. And whether it can break past this in future is the question that we have to ask, right? And but before this resistance line, right, we have this immediate resistance line, which was the previous support, right? Which actually cleared previously on 28th Feb, right, but fell below, right? And now you're testing again, right? So the question was whether it can break this immediate resistance yet again. And the 5th thing I identified last week, right, was all the different support levels, right, to watch out for if this uptrend line actually breaks. So what happened, right, ever since then, right? So here we have the, this updated chart, right? After a week of trading for Bitcoin, right? So first of all, right, let's look at that downtrend line, right? So you can see quite clearly, right, that the price has not break beyond this downtrend line. It's still trading below this downtrend line. Secondly, right, the uptrend line, right, you can see at this uptrend line, it is still being supported. There were times where it tried, it almost went below, but actually closed, somewhere along this uptrend line. So it's still being supported by the uptrend line. And we have this upper resistance line, right? You can see that it's still trading below this upper resistance line. The immediate resistance line, right? So actually, on this very day, the 9th of March, a few days ago, right? You can see this green bar, it actually broke above this immediate resistance line very strongly, right? quite strongly as compared to the previous days, right? So if you have taken a scalp trade here, you might have earned some small profits, right? But the whole market is so volatile now, right? So before it actually touched this uptrend line, it actually came down the next day, right? So yeah, before it even touched this downtrend line, I meant it actually fell down the next day, right? And now it is trading below this immediate resistance line again. Right, so these are the updates, right, from this week, right? So I didn't talk about the support here because it's still being, supported by the uptrend line. So we don't have to talk about the horizontal support. So let's, talk about the outlook, right? Moving forward, right? What are we going to expect for the future? So here, right, I have almost similar chart, right? So actually we have the same downtrend line here, right? So likewise, right, we do have to watch out to see whether price can break beyond this line, right? Or will it continue to be resisted by it, right? Because it's still trading below this line, right? We haven't seen a clear breakout yet, right? So the upside for Bitcoin has, there's no confirmation yet, right? So we do have to watch for this confirmation. Right, we do have that same uptrend line, right? So yet again, we have to see whether it remains supported, right? Whether price will remain supported by this uptrend line, right? It is actually quite close as of the moment, right? So we do have to watch for it to see whether that it can be supported or will it break down. Upper resistance line, right? The same upper resistance line. So yet again, we have to see whether this actually price actually break past it for confirmation of further upside to Bitcoin. Immediate resistance line, right? So this is the same immediate resistance line, right? So what I mentioned it previously, right? It actually broke very strongly on 9th March, but now it's below it again. So we need to watch for this to see whether it can once again break past the resistance, or will it be the resistance that is hard to break, And the fifth thing right here, something new, right, is on the MACD, right? So I mentioned MACD in the, I think, previous videos, right? So you can check that out if you want. But basically, right, it is now negative again for the MACD, but the gap is quite narrow now, right? So there could be a possibility of a crossover yet again, right? And at this point, I'd like to point out, right, that we are seeing this symmetrical triangle, right? We are seeing higher lows in price, and there might be a chance, right, that we break out of this symmetrical triangle and see further upside, right? That is if we break above this downtrend line. But on the converse side, right, if it actually breaks below this uptrend line, then we do have to watch for all the support levels that I mentioned previously. So there's no change to these support levels, these horizontal support levels, right? They are still the same levels to watch out for. So do keep an eye out for this if the uptrend line does not remain supported. So yeah, these are 6 things, right? One more thing to look out for the future. Yep, so do let me know, right, if you concur or you agree with these things, and let me know what else you're watching, right, for Bitcoin in the near future. Right, so at this point here, right, once again, I'd like to ask everyone to give this video a like or a love, right, if you are finding you're finding value in this video so far, so that I'll continue to create such content for all of you guys. Right, so to end off right a session today, right? So I've covered the 7 steps in this earlier section of this presentation, right? But if you like, to download a more detailed version, right? I actually created an ebook, a short ebook, right? That actually encapsulates the essential 7 steps with some elaboration, right? So you can actually go on to my Payhip link down here, right? I'll actually, after this video is broadcasted, I'll also paste this link in the comments, right? So you can always click that link to download this 7 steps, right? My 7 steps guide on how to weather the current or the future market volatility, right? And this is absolutely free, right? So do grab it, do just click on the link, right? And this might be a good reminder for all of you, on how to actually weather this volatility in time to come. Right, and for all those of you who haven't joined my Facebook group, right? I do have a Facebook group, right? That I share, a lot of other things. They have other resources, right? So this, I'll also put this ebook, right, onto my Facebook group, right? I also have a stock calculator there, or not stock calculator, but instrument calculator, right, to do position sizing, right? And I do share on other instruments as well, such as stocks, futures, and so on and so forth, right? As long as it's related to trading, right? So you can do join me, right, on my Facebook group. The link is as follows, right? The handle is as follows. So you can type this handle in and click the join button. Oh, but do note that you have to fill in some of the, you have to answer some of the membership questions, before I can actually grant you access to the group. But do know that it's absolutely free. Right, and for those of you who are joining me for the very first time, right, do follow my social media pages, right? I have 3 social media pages here, right? I have my Facebook page, right, at thetradeengineer.tte, my Instagram, the Trade Engineer, right? And so my Twitter account, right, Trade Engineer 1. So all these are the handles you can type in to basically follow me on my social media. And last but not least, right, before you go off, if you like my sharing, right, don't forget to give this video a like or a love, right? And also do leave a comment below, right, to let me know what you think of my sharing for today. And if you have people that whom you think can benefit from my sharing today, right, do give this video a share as well, right, so that more people around you can benefit from my sharing. Yep. And with that, right, this concludes my presentation for today. Yep. Thanks everyone for joining tonight. And I'll see you again next week at the same time, next Sunday, 9:30 p.m. for another episode of Crypto Watch. Till then, see you guys. Bye, everyone.